Hi, everybody, and welcome to the Plant Stock channel. You're here with me and Mayur today as we're going to take a look at what we could maybe expect from the Q4 2021 reports when it comes to Beyond Meat. And we're also probably going to talk a little about what you could think about when looking at the earnings reports. But first of all, as always, this some disclaimer here, guys, is that whatever we're talking about here is just our personal opinions. It shouldn't be considered as financial advice. So, just important to think about that, guys. All right. So, Mayor, how are you doing today?
Hey, pretty good. Trying to
Yeah.
hang in there with this market. So
Yeah.
I know everyone is feeling some pressure right now.
Yeah, they're down about 6% at the moment, down to $52, 52.74.
Yeah,
So
yeah,
it's pretty harsh.
it is very harsh. The
Yeah.
market is extremely, it has changed its mind. It's made a one. It's done a 180 in
Yeah.
terms of how it wants to value companies
Yeah.
from a year ago to today, which is absolutely incredible.
Yeah. Definitely, from according to Seeking Alpha, the latest news is that the tensions between Russia and Ukraine is, yeah, basically getting worse again, and there's a lot of nervosity there. So I guess, and the threat of the inflation seems to really get people to get nervous. And it's obviously not only Beyond Meats. Most stocks are really taking a hard beating. Maybe it
Hmm.
didn't help either that Beyond Meat got downgraded by Goldman Sachs 2 days ago, basically from 74 to $47. So
Right. And yeah, and I think I understand that call too, just because it's a part of it is a valuation call, and that that resonates with me just because I'm trying to my best to be as neutral and data driven as I possibly can, because Beyond Meat is one of these weird exceptions where I'm like slightly emotional about it, which is never a good thing if you're an investor. So everyone should know that I have a bias in this. I want both Beyond Meat and Oatly and every plant based company to 10x their revenue.
yeah,
um,
feel you.
but there's also valuation at play right now, and that's exactly what I think has been happening with everything, not just Beyond Meat and Oatly, but everyone
Yeah,
is coming under the microscope, and investors are saying, "Hold up, we priced your shares at 10 times revenue,
yeah,
20 times revenue, in some cases 50 times revenue, but where's the profits? Where's the cash flow?"
yeah,
We way overshot our expectations, and now we're correcting that.
yeah, exactly. So, and my understanding is, everything I'm reading and looking into, is that probably could be hoping that it won't continue going down this much, but they're probably going to be down off and on in the next month or two, especially depending on what's going to happen with a Russian Ukrainian border skirmish there. But also when it comes to the 16th of March, right, when the Fed actually gives us some information on what they're planning to do. And I think even if it is going to be a harsh rate hike, now they're basically talking about 50 basis points, right? Which is like 0.5%.
Yeah,
And even if they would go higher, I think normally, and there's talk about according to Goldman Sachs, anyways, that they're predicting now 7 rate hikes this year. And yeah, the different banks say different things, but I think after that Fed meeting, I think there'll be more clarity, and even though it will be, I think it might be to some extent after that priced in. And historically, when there's been rate hikes, my understanding is normally it's a good time for stocks uh, after.
yeah, because usually rate hikes coincide with economic expansion,
Yeah,
so that's typically what happens. But, I think this is a little bit of a different time though, because these rate hikes are coming in order to combat inflation that we're seeing, and so it's a little different this time, I think.
mm,
Eventually, I think growth will return, but right now, the reason why stocks are down is because we're starting from a very high base.
Yeah.
Valuations were exceptionally stretched, and that's why even when I bought Beyond Meat shares, I had to hold my nose and buy it, even though I wanted it. I was waiting for more than a year for the shares to finally correct, and it only corrected after I bought it.
Yeah.
I waited for a year and a half, watching the company supporting it, but from the sidelines. Uh, but that's just how things go sometimes.
But that
The stock drops after you buy it.
it just goes to show also that you've been doing this for what, about 15 years, working
Yeah,
with this,
yeah.
and it just shows that no matter how experienced you are, you really can't predict the market, right? And it's just a fool's errand to try to do that.
Market timing is very difficult,
Yeah.
and only very few people are successful at doing it.
Yeah. And usually, if they do time it right once, then they become like a guru. But maybe they did it once out of 10 times, and that's what people are going to remember. That's the dangerous thing.
Yeah,
Yeah.
yeah,
So, but yeah. So, just when it comes to before we talk about what we could expect from Beyond Meat's Q4 earnings now next week, guys, which is going to be on Thursday. If you could like maybe just give the audience some kind of idea, what should you look for at when it comes to an earnings report? What's the specifics? Should you look at everything? Should you go through
yeah,
everything, or yeah? So
yeah. Sure.
hmm,
Yeah, so I can share my screen here,
yep.
and we can just walk through the numbers here, and it's pretty straightforward. What I'm expecting is a all I'm expecting for Q4. It's not a very high expectation. Um, it is just evidence of stabilization is what I'm mainly looking for out of the Q4 numbers. So we saw, the Q3 numbers come in, and it was very light. It really disappointed investors, everyone, including myself, everyone.
You haven't shared the screen, just so you know.
And yeah, yeah, I'm just doing that right
No,
now.
sorry.
Yeah, and um, here, let me try that again. There we go.
There we go.
So these are my expectations. I'll walk through the data first, and then we
Hmm.
can look at the charts. But I just have a compilation of the last 3 years of data in terms of revenue, gross profit, R&D, SG&A, diluted shares outstanding, EBIT, which is operating income, and net income, and earnings per share. So, this is obviously these are the actuals up through Q3 of 2021. I'm expecting about 115 million in revenue for Q4. So, getting back to growth up over and above what we saw in Q3. And but not quite reaching or recapturing that high watermark that we saw in Q2 of 2021. I think
So sorry.
part of the reason why we
Did you expect 115 million for Q4?
yeah, 115 million. Yeah.
Okay, that would actually be a beat about 12 to 13 million, if not more, actually, from what
Yeah,
you
yeah, I
said.
think it's yeah, I think it's reasonable to expect that. I just think that Q3 was a an anomaly. I think it was just all of the stars were aligned to make a bad quarter,
Yeah.
with that one facility getting flooded or didn't have potable water, and just another quarter where not many deals kind of came through during that quarter with regards to food service. So I think we're going to get back to stability from that base, and get to about 115 million in revenue for the quarter. So that's a pretty good growth over year,
Yeah.
as well as quarter over quarter. So not still not great growth, but it's about 8% growth year quarter over quarter and 12% year over year.
All right.
So I think that's going to happen, and that gives us roughly about 26.5 million in gross profit. And R&D should pick up a little bit, as we know. They started the process of the new R&D center in Shanghai
Hmm.
that they have announced. So I think it's going to continue this trend. of this upward trend in R&D, going from 14.8 million last quarter to 16 in Q4, and then some SG&A increase associated with that as well.
Yeah.
They're just estimates. I'm just looking at the trend historically. I do think that the trend in SG&A growth is going to slow a little bit.
I think Mayur disappeared here, unfortunately. I think he seems to have some kind of issues at his end. Let's just give it a few more minutes, guys. But depending when he will be calling in, let's just again take a look at what actually Wall Street believes here. And they believe, again, it's going to be around 101 to 102 million. And Mayur is expecting 115, which is a pretty good beat then, considering. And many of us have talked about that they might have been lowballing it, right? So that could actually be a good news. And if it actually reached that or something like that, we could hopefully temporarily see the stock go up again. So again, that's going to be then next week on Thursday. So let's see if he's going to call soon, hopefully. But again, we can just look at what they're expecting for the whole year. And of the 19 analysts, they are expecting about 465 million. And they had about 408 million last year. So not that impressive from a growth company, but we know the situation during 2021 as well, right? On the low end, 459, and the high end, 480. So let's just see again if we can hear from him. Mm-hmm. Yes. All right, guys. So we're just still waiting for him. But as we can see, if we just move on again to Beyond Meat here, they're down about 4% now. 7%. It was the actual dollar amount. And then when we have the reasons, like I said, one of the biggest reasons is that the tension here, guys, as we talked about in the Ukraine, seems to be worse. But also, again, when it comes to the inflation worries, that's a whole other issue there too. If you guys have any questions, this could be a good time to ask them. So, all right, he's calling in again. Hey, Mayur.
Hey, that was weird.
Yeah, it's no worries.
I didn't realize it cut off. Do you remember what the last thing I said?
I think it was like 1 or 2 minutes ago. So,
Oh,
yeah.
okay.
So,
So
but yeah,
yeah, so I was just basically saying that my expectation is that we should show a halt of further operating income losses
yeah,
from Q3 to Q4. So my expectation, so Q3 the loss was about $54 million
right,
total in operating income, and I think this quarter will be roughly 55 and a half. So I think the rate of change is going to slow,
yeah,
and we should be getting back to I think this number will start to reverse its course
yeah,
in 2022
yeah.
and head towards profitability in 2023.
All right. I actually showed them when you disappeared now what Wall Street believes they're going to get for the whole year, which is around 465 million.
Hmm.
Well, have you looked at that with your maybe
Yeah,
added?
yeah. So this is the quarterly revenue growth.
Yeah, we can't
Can
see
you
your
see my
screen now,
screen?
though. Just so you know.
Okay, so let me share that again. All right, so this is the quarterly revenue growth,
Yep.
and this green is my estimate for this quarter for Q4.
Mm.
So I'm expecting 115 million in revenue for this quarter, and see, sometimes it's very important to zoom out a little bit, because if you're focused on quarterly numbers, you'll see that this trend right here doesn't look all that impressive, right? It's just we're kind of sideways. We had a one big spike in Q2 of last year, and then we're really sideways.
Yep.
But if you zoom out and look at annual growth, you can see where the trend is.
Yeah.
So every year, 2020 was a breakout year just because they had a lot of tailwinds with COVID and everyone staying at home, so they're stocking up their refrigerators. It was actually a high watermark, and I think that they're going to show, pretty good growth overall, even despite the fact that that was a high watermark. You know,
Right.
that was above average growth, for the year because of an extraordinary event. So even with that, 2021 is going to show, some pretty good progress. So about, going from 406 million to about 479 million for the year. So my expectation for the full year one is 479 million dollars of revenue.
Right.
And really, it's 2022 where everything is going to start to get interesting. So, I think half of the call, or probably less than half, I think, the importance of Q4 is going to be, maybe 30 to 40%. And I think the vast majority of where the where what Ethan's commentary is going to
I think you have some issues on your end,
be
Mayur, when it comes to the net.
on 2022 expectations,
All right.
because we know all of the exciting. Mhm. Sorry, what was that?
I think we have some problems. I think it's on your end when it comes to the net. It seems to be drifting off on and on. Or is
Can
it?
you hear me still?
Yeah, I can hear you every now and then, but it's breaking up every now and then. All right. Let's see. Yeah, yeah. I don't know what's happening here. It seems that Mayur has some issues on his hand. It seems to be working here though. Uh, yeah, guys, please give us a comment if you notice any issues on my end here. Okay, Mayur, you're back. Okay, he disappeared again. So yeah, there definitely seems to be some problems here. Okay, he's welcome back.
All right.
So,
Let's try it this way. This is I'm on my phone now, so
oh,
hopefully this is better.
all right. So
But unfortunately, I can't share my screen since I'm on my phone now.
yeah, no worries.
Um, but yeah, I think the vast majority of this of the call and where the how the stock reacts is going to be based on Ethan's comments of where what 2022 is looking like.
Yeah,
Um, it'd also be interesting if they could share some data. Sometimes companies do that where they share some preliminary data, so far in the current quarter as well, to kind of give confidence of where things are headed right now.
yeah,
You know, so I think that's going to be 60% of the importance that people give, to the call itself is
yeah,
2022 expectation.
yeah.
And I think
Exactly.
that's going to be where it's going to be a breakout year, for Beyond Meat in terms of growth as well.
Yeah. Well, that makes sense. It's actually someone who
So I'm
asked here.
I'm expecting, mhm.
Yeah, someone asked that. Do
Yeah,
you
I'm
think?
expecting about 35% growth for 2022.
Perf-
So I think Beyond Meat should get to about $650 million in revenue this year, and that's going to be super exciting to see. And that's not going to be enough to get positive earnings per share. I think they're still going to have to play aggressive with investments in R&D and SG&A.
yeah.
But it should slow the cash burn, pretty dramatically. I think it should be cut in half for 2022.
All right. Yeah, yeah. The
Yeah.
estimates from Wall Street is 611, and you're talking about 650, so 40 million more maybe there. What I'm wondering about is
Mhm.
that if they actually got more, if they got launched to more McDonald's nationwide, like we talked about, 14,000 locations. If that would happen soon, it would have to happen soon if that should be part of the whole year, right? I just imagine that that could mean more, even more than 650 million.
Yeah, so this is the other part of it is that, it's we still don't really know, and this is part of the reason why the stock is down, because even analysts don't know how to model these revenues.
Right.
Because it's one thing to talk about total revenue, like total sales of McPlant, but we don't know what the revenue share agreement is like between McDonald's and Beyond Meat and all these other restaurants as well. So it's going to take at least a quarter of data, like Q1 data,
Yeah.
to really start to understand the relationship of what that agreement looks like. So analysts will do their channel checks on looking at McPlant sales, and then they're going to look at Beyond Meat's revenue. And then there should be some way to link the two and to create a correlation between McPlant sales and how much of that comes over to Beyond Meat
Yeah.
and how much of that is kept by McDonald's. So we won't really know that until Q1 is in. You know,
Right. So, so
so
yeah, because I have a question here. That do you think there's any chance that stock will pop up even with earnings beat, given the time we're in?
it's I to be honest, I don't think so. Um, I think so. I posted a tweet yesterday, and this is where I think stocks are headed in terms of their valuations. And so I think Beyond Meat is headed to, if you basically if you can come up with a reasonable long term revenue growth target
Yeah.
for a company, let's say it's 30% or 40%. I think for Beyond Meat, it's going to be around 30 to 40% for the next couple of years.
Yeah.
Um, then the rule of thumb is where the enterprise value to gross profit multiple will get to.
Yeah.
So let's say if they do 40% growth for the next 3 years, right? I think that's possible, but that depends on if the market believes that or not. I think that's extremely likely. But let's say 40% is where everyone agrees on is their 40% long-term growth rate. Then I think it's going to a enterprise value to gross profit multiple of somewhere between 10 and somewhere between 10 and what is it, like 12, um, in that range.
All right. And they're right around what number right now?
10 to 13, in that range.
Yeah.
They're at, so let's say, if we look at the last 4 quarters of gross profit, that's about $130 million using my estimate for Q4. So, there could be some further downside. So like if I were to use the upper end of my range, which is a multiple of 13, point 2. So 13.2 times 130 million, um, that gives us a market cap target of roughly 1.7 billion.
Right.
So 1.7 billion market cap, and given my estimate for the diluted shares outstanding, which is roughly $64 million,
Yeah.
that gives us a price per share of somewhere in the $30 range. So that's the bear case for Beyond Meat. Roughly $30 a share.
Hmm.
And it could happen. I mean, a lot of these companies are getting really wrecked right now. Like companies that even don't even have gross margins like Beyond Meat. Like companies that have much higher gross margins. Software companies. We saw what happened to Roblox this quarter, just this week. Roblox reported, and it was a lot of exciting things that they're working on. The market didn't care, right?
No.
They're taking everything to the woodshed.
Yeah.
So I think the bear case for Beyond Meat is in that $30 range, and it's the same with Oatly too. Um,
Yeah. Under
the way
five.
that stocks are being priced right now, I think it should get to, yeah. If this is the trend, if I'm right about this range of enterprise value to gross profit relative to revenue growth expectations, Beyond Meat could see $30 a share. Oatly could see $5 a share.
Yeah.
So that's where these stocks are headed, and it is what it is.
Mm. But
So I think once it gets there, though, the faster it gets there, the better, right? Because let's just get it out of the way, get all of the excess speculation, get all of the sky high expectations out, build a base, and then allow people to now formulate a new dollar cost average at that new level,
right.
after which the companies will trade based on their fundamental revenue growth.
Yeah.
Right now, the main risk is valuation risk. Once that valuation risk is removed, then stocks will move up or down from that base based on their actual fundamental performance, which is how stocks should perform anyway in the long run.
Yeah.
We shouldn't be, worried about valuation risk much. We should be focused on where our revenues going, where is profitability going, um, and how much is the upside for the company in terms of revenue and profit growth.
Yeah.
That should be where stocks trade in the long run anyway. So the faster we get to this multiple, the faster we can get back to a discussion on fundamentals.
Yeah, I think because I think we talked about in one of our videos that within I think 4 to 5 years, you see them at around 160 to $180, and I'm guessing that idea hasn't changed just because it would go down to $30. It's just be a good, better pricing to go into.
Yeah, yeah, exactly. It'd be a much much better price. It takes us back to where valuations are normal. We
You're starting to disappear again. Okay. Uh, Guys, we're probably just going to do this a few more minutes, and then the whole thing about. Okay. Well, welcome back.
all right,
Yeah, I
all
was
right.
just gonna say
Sorry about
tell.
this. It's
No worries. I was gonna tell the
yeah.
audience that we'll just do this a few more minutes, and then when it comes to how to
Mhm.
read an earnings report, I thought we could do that when the actual earnings report is coming out, so we could do that at the same time, maybe next week. Then,
Yeah,
yeah,
yeah, absolutely. That'd be great.
yeah. So,
So I'm looking forward to it. I honestly don't think that anyone should really. I don't think we should panic about any of this stuff. I think this is just a very healthy move for all stocks. It's
yeah,
not just obviously not specific to Beyond Meat or Oatly. Everyone is being put under the microscope. Redfin right now is down 25%. It's one of the biggest discount brokers out there in terms of in real estate. There's so many other stocks down 30% in a matter of 1 week.
yeah,
Um, and Kathy Wood, right? Her entire flagship fund is down, right?
yeah,
Everything in her portfolio is down too. So no amount of research is protecting you against companies that were once very highly valued,
yeah.
right?
So, but we
So
should.
it's just a function of us living through a crazy time.
Yeah, definitely, definitely. And we should remember when it comes to Kathy Wood, what I like about her and her, she's not wavering. She still believes that when it comes to innovation stocks, disruptive stocks, which Beyond Meat definitely is, it's still going to be the future, and you shouldn't bet against it. And when it comes to her own funds and her own stocks, she's basically bets half of her own fortune on it. So she stands to
Mhm.
lose something there too.
Yeah,
Mm.
absolutely.
So
So yeah, I'm not selling any of my shares. I'm still long Beyond Meat and Oatly. Obviously, it's not investment advice. Don't take it as investment advice. But I'm personally long all of my shares of both companies and all of my other companies too.
yeah,
And I'm just simply going to wait for some evidence of a bottom forming.
yeah,
And once that is put in, then it's time to start dollar cost averaging.
Yeah,
At
exactly. So, but I thought maybe we could just have one more question here before we end this from Plant Geek. Hey, gents, this morning GE warned it's going to have continued supply chain issues in 2022. What's the risk? What is the risk of the same with Beyond? Or yeah, if there's the same risk for Beyond, then I guess.
Yeah, this is a commentary that we're seeing everywhere. Every company is reporting supply chain, risk that they're working through.
Yeah,
And this is why it's important to have, you multiple factories in every continent,
yeah,
right? Kind of like what Tesla's doing. That way, you're not dependent on one supply chain to supply the entire world. So that's why it's important to have, a factory in North America, a factory in Europe, and a factory in China, so
yeah.
that you can hit all of the major population centers all over the world. So that's basically what Beyond Meat is doing. So hopefully that supply chain risk is mitigated at least to just one geography rather than all
But
geographies.
that's great that you remind me of that actually, because the really positive thing is that when it comes, they're in the Netherlands then, right? And I think there's talk about a second facility being built in Europe as well. But Europe, everything I've read so far, is actually doing way better than the U.S. when it comes to inflation. Inflation in Sweden, for instance, is around 3.5 to
Mhm.
4%. And yeah, I think most countries in Europe, they didn't print as much money here as in the US. And it seems like overall they just handled the situation better and probably is going to recuperate much faster, which is in Beyond Meat's favor than in Europe, right? Because there's so much expansion opportunities here in Europe. And then we have China, which is amazing too. My understanding is that the banks have actually lowered the rates there because they want production to get going.
Mhm. Yeah,
Hmm.
yeah, absolutely. And I think right now Beyond Meat is still somewhat pricey in Europe, um, relative to the price of regular beef
Hmm.
or even organic beef. In the U.S., that price has actually started to converge. I've seen Beyond Meat go on sale like for a pound. It can sell for somewhere between $7 to $8
All
when
right.
it's on sale,
Yeah.
which is close to where organic meat is priced.
Yeah.
So that gap needs to narrow in Europe. I believe it's a lot wider
Yeah.
than it is here in the U.S.
All right.
So once that narrows, I think that's also a source of new revenue and market share growth.
Yeah. So um, no, it was someone. Yeah, someone asked here if you, Mayur, meant that we could expect them to come to $30. Yeah, there's a possibility of that. That's what we talked about. That's correct.
Mhm.
And the last question here, maybe, does the timing of earning call, which is Thursday, imply bad earnings and misses, so the market absorbed the bad earnings in the weekend? I don't think so, because I think it was around this same time last year. It was in February, anyways, but I don't.
Yeah, yeah, and it's Thursday, so it still gives everyone a day to react,
Yeah,
to the earnings. So,
exactly. So,
you know,
all right, but
mhm.
I think we're probably good here. Like I said, guys, we were supposed to actually talk about what to look for in an earnings report, maybe in a 10K or in a quarterly report. But since we're having some issues with the net here, and you're on your phone, it's going to be hard for you to share your screen there. I think might as well do it when we actually do talk about the actual Q4 report and 2021 report now next week. So me and Mayur, we're going to talk about how we're going to deal with that. Have you been thinking about it, Mayur? You think we should do a live stream of the actual earnings call, or would you prefer to take a look at it after instead?
We can do just a quick reaction to the release,
Yep.
and then
The
we
next
can all
day.
just focus on the call.
Yeah.
Next day we can do a recap of everything we found out.
Awesome. That sounds good. So
Yeah.
because yeah, normally the earnings call with Beyond, they have like yeah, normally 15 or 20 questions from yeah, bigger investment banks. So they normally take about 1 hour and 20 minutes. So yeah, we could do that like really quickly there and let people also be part of it. Usually some people like to be hear it. And then like you said, then we could have like a 10-20 minute breakdown the day after.
Yeah,
Awesome.
absolutely.
Let's do that. All right.
Sounds
So
good.
thanks a
Looking
lot
forward to it.
for today, Mayur. And guys, if you want to connect with Mayur, again, this is his Twitter account. If you take a look in my description, you have his Twitter account there too, so you can get linked. And Mayur, if you have questions for him, also it could either be on Twitter or it could be on our free Discord channel, guys, where he's active, especially on Beyond Meat and Oatly in that group. So, guys, feel free to join us. All right. So thanks for today, Mayur.
All right, sounds good.
Bye.
Talk to you guys in the Discord.